All right, everyone. Thanks for coming today. We're on our 22nd live stream already. A lot of time has passed, already half year in. So I'm always grateful for everybody joining into the live streams, hitting those questions. And yeah, I'd like to keep going like this. So if you have anything, just speak up or write it in the chat. I'll try to check the chat as often as I can and then follow through on those questions. If there's nothing actively requested or asked or talked about, and I have some questions from the questions forum from Discord, and then I go through those. So yeah, I guess let me share my screen first, which would make a lot of sense with TradingView. Click that, maximize it, and there you go. I open the chat already. So if you brought anything, just shoot right away. Otherwise, as I said, I would go through some questions prepared, which is, for example, Chido asked, I'm pretty new to all of this and I'm seeking minimal viable strategy I can use to get started. Something replicable that can get early wins and build confidence as I learn. What is your recommended simplest game plan I can implement now to start building momentum? I guess it's a very good question and also a very loaded question. I think if there's any desire for any starters, then it's basically this one. The vibe is kind of where should I start and how can I even get started? Besides learning, drawing lines, honestly, that is already where everything starts, exercising, starting with very small positions and then build confidence throughout predicting things right or making good decisions, because a good decision can also be like exiting a position. That is when your trade got invalidated to a certain degree and you don't stand behind your trade anymore. Even learning to do that and learning to say, yeah, I was wrong and I'll take the L. I take the small L now for the greater good of not losing more while I'm not certain anymore that my trade is still valid. So that's a very underrated skill. That's due to the simple fact that humans are very ego-driven also, and when you hit the buy or hit the sell for short, um, immediately the reptile part of the brain takes over that says like, okay, I made the decision, I'm stick to it, and now I'm gonna full force bite into my own decision that I did that decision right now, and that's how you build the ego to then make it much harder for yourself to then, even a minute later or 5 minutes later, an hour later, whenever that decision should then be canceled or reverted, to get to the point that you say, I was wrong. The trade is invalidated because it reached my invalidation point or some closure happened. And now I'm just pulling the plug. And now it is what it is. Fight to live another day and go on and preserve the capital that I have, rather than sticking to it and be like, yeah, okay, no, I longed and now the price goes down, but hey, I said I longed, so the price has to go up, and then you lose a bunch more money because you let ego take over and emotions. So that's for very basics, very important. From a chart perspective, we have had a couple of live streams already and videos in the educational playlist from Sin, where we cover how to find certain setups and to find easier examples. But I'm gladly going over through some basic ideas again. So let's open another Solana chart here. Maybe can I get rid of, that's a bit annoying here on the side. Let's check a new layout maybe. All right, so turn the volume out because we don't care. So the basic idea, if you're starting really out and you want to find setups, the first thing you want to look out for, if you go for the very basics of the FibLab framework, is basically the candle engulfment, which is how trades are generally created, the very basic trades. Always keep in mind there are more complex trades, more advanced trades, and there are infinite amount of trades because price goes always either up or down. Is it advised to long exactly right now? To my opinion, not, but you can argue and find advanced setups here to do it. So keep in mind if what I'm talking just now, given the question Shido asked, is if I had to start somewhere, what are the basics I'm looking out for and which steps can I follow through from there to find at least something that has a good amount of chance to give me a trade, right? So that's keep that in mind when I'm talking. So rule number one would be have a candle engulfment. What is a candle engulfment? A candle engulfment is again when you have in either direction, there are two directions. There are bullish engulfments and bearish engulfments. In this case, we have a bullish engulfment because this distribution candle, so selling, gets his full body completely engulfed by this accumulation candle. This creates a fib trade where you take the fib retracement tool, plug it onto the lower end of the wick. I have the magnet on, so it snaps, as you can see. The cursor, when I go nearby, snaps to the wick. Even if I go, not if I change time-wise, but if I go on the same horizontal, vertical column, it snaps to the wick. So I start here with my settings on the fib tool. I show you afterwards what I mean. And then you go to the opposite side of the body of that candle that got engulfed, right? So I start at the wick here, upper and here. And this creates a fib trade. And how does it work? It basically gives you the entry exactly at this one line, which is where you put the second anchor and being the upper part of the body. And it gives you an exit at the, now you can't read it because the bars are in the way. It gives you an exit at the 1.618 fib level, just by how you have plugged it on and and then it tells you that level. So it gives you a long from here to here, like this. Whoop. And yeah, what do you know? Very, very good example right in front of our faces. That's a happy pass, you know. You hit the entry, you go slightly through, you already hit it here. Then it goes up, doesn't go to your exit. It goes to the entry again, goes a bit through, and eventually it goes to the exit. That's already not the perfect way it could go because many times it hits the entry very closely and then goes almost immediately to exit. But in most cases, it's also not how it's going to be. So you want to learn the nuances. And I try to go through some of those after I've explained those basics. So this was also already not a too bad one. Could have even taken out two trades if you would go for some advanced setups like taking partial profits, visits the entry again, add that partial profit back in again, and then eventually it hits your exit. Probably have had a second partial profit then here, and then take full profit here, for example. So there are very, very many ways to actually approach the basic rule and carry it to your execution and then make, as you learn and as you exercise and as you build momentum for yourself, like you asked, and as you get better and get this confidence in by making better decisions and successful trades, then you eventually find out what works for yourself to leverage your own success and improve on that and iterate through that. And then you see what works for you, what doesn't work. Maybe go two steps back, then go 4 steps ahead and whatnot. And you know how it is. That's just part of the learning. So this was a very basic one. But how do you know when to wait for those and when to actually take those? Let's draw it out a bit more. So what this do, it created a so-called hold level, as we know from the basics. So just let's plug it on here to have it on site. It's a 4-hour hold level in this case because I'm on the 4-hour time frame. So hold levels and basically all levels are usually self-referential and beholden to their own time frame. And that means although all rules to apply to all time frames equally, if you have certain resistances and supports, let's say a 15-minute support or 4-hour support, but then you have a daily, weekly, or even a monthly trade, you would not necessarily want to respect a 4-hour support or resistance against a weekly or monthly trade because they have like usually much stronger impact. And I can carry this line to another time frame, like the 1 hour, to stay aware. But yeah, again, as we're finding and trying to talk about basics, let's stick to the time frame we find a trade on and spin off the rules how to determine if this is a good trade or not based on the time frame atomically rather than trying to overcomplicate it now with multi-time frame digging. So now an initial question could be easily, yeah, okay, that's like super hindsight. But when I do it, I cannot find those, or I'm impatient, or how can I know what will really happen? Because now you just show the trade that has happened already, and obviously it worked. So easy pick to explain on, and would be a fair question. It's also a question that is correct at times because you will find examples that don't play out immediately, and that's where you need risk management in place to a certain degree and not let your ego take over. As an example, we have another bullish engulfment here. This creates a hold level. On the next visit, it will create an entry here for a long, and the exit would be the 1.6 level. And if you look closely, I can zoom in a bit. The trade got created here, got entered here, and never reached the exit. You can see that very easily because if we go one candle after the other, the first candle to hit the entry is here, and there was no candle afterwards that ever got the exit yet, right? So would be a fair take. But usually if you hit a long here, you should also be aware of the other context. And that's then where you should really work first on how to manage your trades rather than trying to understand the basic rules and expecting for them to happen 100% of the time in the time frame immediately without any risk management, because risk management goes first in capital preservation.
Yeah, I know you're tired. That's why I'm trying to get you to sleep.
And sorry, gotta mute somebody. Charger, could you maybe turn off your microphone?
Oh, my bad. Sorry.
No worries. Thanks. So a typical move of a beginner would be, hey, I have a long here, and it hit the entry, and yeah, the trade is dying, and the price kept falling and falling, and now here or somewhere here, the panic kicks in and is like, oh my God, what did I do wrong? You didn't necessarily do something wrong by taking one rule standalone and applying it and then doing this. But you want to understand context and maintain your risk management and have, if you're starting out, and most importantly, have small positions. Rather burn $1 or $5 100 times rather than trying to burn $500 in one trade and then be like, oh, this framework or my trading skills or I'm such a noob and everything is shit. Because there would have been reasons why you would know this would have not been a good trade. And I just take it as an example as to be aware of that this will play out eventually, but it can certainly put a lot of stress onto somebody starting out and sitting through all the downturn and seeing your P&L on your trade, depending on your capital allocated or leverage, could be very painful. And the most typical thing would be you die through all of this. Now it builds some form of support finally, builds all the short capital over here, which gives very good reasons to visit 100 plus in the near term before rolling over, if they want to do it. And you exit your trade like here, just to see it do this and then bounce and go through the exit. And after all, the statistics were right again because they say all the trades play out by 99.5% on all of the charts history. They just don't have a claim of the drawdown in between and no time claim about how fast they play out. And that's exactly where the knowledge transfer really comes in, not only knowing those trades, this framework and their rules, but actually learning the nuances and the risk management around it for yourself to have the capital free again and minimize losses and minimize stress on yourself, even knowing it would play out, because it could mean that this trade plays out after doing this and then hitting your exit. And you don't necessarily want to have all your capital allocated here and never managing your trade after entering it. So back to the basics, just as to give an honest counterexample of not your hindsight picking. No, it was obviously a very oversold situation here, a very large distribution candle engulfment here, and where the second finding or the second thing for an easy setup you want to start out with as beginners is generally you want to take trades at maximum support or maximum resistance, nearby at least. And so for understanding, you put a break level here. Following the basic rules, you're very close already with your long here. You're just $2 off and have breathing room already, but are basically as close as possible on this time frame to support to hit the long here. And then just wait it out, and you have a breathing room of at least $2 before even any sweating should happen, because the next real support on this time frame here, without drawing any other lines to the left and whatnot and trend lines, would be a breathing room of $2, and it wouldn't even have ever scratched it yet. So for the understanding, that's a very easy approach to find trades that have a good chance of putting a lot less stress on you and also be actually profitable. On top of this, so besides trying to take those trades hand in hand with being close to support, being the long side, and inversely then also for the short side, for resistances, you also have this principle of, and I extensively talked about it in 2 other videos, so I want to take the chance here to keep it a bit shorter and only explain the basic of the front side and the back side of your charts and your candles, which is basically, whenever price moves from either peak or bottom and changes direction, you have some form of trend reversal, and trend trend declaration, the final trend declaration, is very hard because it's also time frame sensitive. So on the 4 hour, you have like an uptrend here. It looks like you have trying to build either slow dying top and then downtrend here, or given on the support that it's landing, some form of common wording, bull flag, and then build some support while resetting indicators and then bounce higher. That being said, you have for now some upside here, so a little uptrend, little downtrend here, and this basically changes nonstop. You have an uptrend, downtrend, uptrend, downtrend, even if it's sideways. Like here, you have like a little bit of downtrend, a little bit of uptrend, a little bit of downtrend, a little bit of uptrend. So it's very heavily dependent on time frame. If I go on the daily, that's basically like sideways. If I go on the weekly, that's basically down. So you get the idea that it's very heavily time frame dependent of which trend you are really in, and depending on how far you zoom out. But taking again the chart in front of us, after this dump here and this long got created, you get a bit of upside. So if we are going on the replay tool to make it a bit easier to understand as it builds, so just like this. As a beginner, the trades you want to look out for is again, fib trade gets created. So let me put a fib trade created. 2, take near, support / resistance. Take those. Can I put it up here maybe? Whoop. And then the third part, which is has a bit more to do with chart structure, market structure, and how reactive price is after it has built an uptrend and a downtrend, or a downtrend and an uptrend, in between your trade and your entry, which is then the so-called, and I draw it out after, I just write it down here that you have the wordings, trade, the so-called backside on the front side. So what does that mean? A backside is always the opposite direction of the current trend being in. And I hope now it makes a bit more sense of why I explained all the other stuff before of price constantly changing between uptrend and downtrend. So I repeat that. The front side is the current price action and the current trend relative to the backside of the prior trend. So what does that mean? If we go on the candle seen on the replay tool just now, as the price is changing its direction, it's now building a front side against this backside here, because this is a prior trend. It was the downtrend, and now it's switching into an uptrend. So this is your currently running front side, and you would want to take shorts according to the backside here. But what do you know? From basic rule number 1, if fib trade is created by a candle engulfment like this one, you don't really have anything here. You have only distribution candles, and the last one is up here, and this one already finished, because as you can see, if I plug on the fib tool again, on the wick high to the body low, because this is a short, so the same rule of how you apply the tool is just inverse. For the long, it's from the lower end wick to the upper body. For the short, it's the upper wick to the lower body. Makes sense, right? Because you hit the entry here and you want the price to go down, so your entry should probably be below your entry. And what do you know? This trade got created and it immediately hit the entry, which is also like a very nice example of how good they work most of the time. and then hit the exit, and that's your profit. And now this trade is done and dead. It doesn't exist anymore because it got created, it got activated, and it hit the exit and done. Out of the radar. So there's nothing to trade here while this front side is building, because this is all only down and you don't have shorts created on this specific time frame. So if I hit the go on the candles now, it cannot hit anything here to create a short. Yes, it reverses eventually. And again, I can explain why it did that, and maybe you even know already and whatnot. But for what I try to explain for the basic examples, we keep that aside now and follow through with what I'm trying to explain of how you find your trades as a beginner, which can take a lot of patience, you know. That's a lot of 4-hour candles, and you might have not taken a trade for many days. Fair enough, it's okay, take your time, or go down the time frames and find the trades there with the same rules, with small position, with a good mindset of pulling the plug on your trade when it's running against your idea and you don't stand behind it anymore, and so on and so forth. I don't have to trade the 4-hour trade. It's just a very good time frame to get good price action in, and to get also get a good amount of time to not panic act on a lot of candles printing against you, and while you're trying to exercise, you have a lot of time on the 4-hour usually, and it's not like super massive dumping or super massive dumping. So as this front side has built, it obviously went sideways, so it's still part of this uptrend, and there was nothing to take on the short side because there was no trades. But as the trend changes again from this topping and goes into the downtrend, this wording here on 3 still holds. It's just that your running trend changed. So again, what do you know? This prior front side here. So this was the front side while it was going up. Then it went into sideways. And when it then goes down, this front side turns automatically into a backside just by the fact that the trend changes. So let's get some more candles in to actually have that downtrend to hitting the entry then eventually. Yeah, it was a very slow death, but it is what it is. You don't always get what you want. A bit more sideways, then eventually slowly died into your entry as the downtrend. And this is your running front side, because it did change the trend from going up, sideways, down. So I cannot use the letter F to indicate because both have letter F. So that's like front side. No, sorry, that's front side, back side. Forget it. So we can actually mark this here and put a B on it. Not the most beautiful drawing, but it is what it is. So you have the front side here. You have the trade created here, and it didn't hit the entry yet. So it's still valid until it hits the entry. And you have the fact that you're sitting near support, which is clearly visible here as you put the lowest possible break level already here without looking to the left, as I said. And you have the situation that you're trading the backside on the front side. So that basically means a lot of stuff has had time to settle, to reset, and now that price is approaching this trade, there's less likelihood of it just hot knifing through. Yes, it can happen. Certainly does at times. And as you can see in the prior example, it basically did that, right? If we have that long here. It's a very, very, very shy front side, sideways. Front side turns into backside and have the front side here. So there were good reasons that we kept dumping here for other reasons. And yeah, it's maybe not the most beginner-friendly situation to have if you have had long this, to be fair, but could also be probably found why either this was not a good trade without only looking at the 4-hour. And as I said, especially when you're learning and starting out, keep the position size small. It doesn't help you, it doesn't help anybody if you try to go big just because you want to make money quick. That's just not how it works. The most money is made then in long term, and if you can bring yourself to build confidence and a success ratio for yourself that gives you the confidence of trusting your own chart and of trusting the framework, then that doesn't work if you're trying to hit big every time and by a large margin and by a large chance you only take a few trades, and those are exactly the trades that for many details will not play out immediately, and then you're just burning your money because if you would take every single trade on this chart alone for all 4 hours that there are, then probably going bigger would still have a decent profitability. But yeah, as fate has it, yeah, you're most likely hitting those ones that take more time or are against your odds of playing out immediately, and yeah, then you're just burning your money. So start small. Don't try to hit Lambo money in one trade, especially when learning. And if you're sweating through your entry very deep, like could be anything, depends on your leverage. Best is actually take no leverage while you're learning, but I cannot hold people back from taking leverage. So I'll say use at least little leverage and then figure out for yourself how much breathing room you can give yourself to this entry to then actually hit the stop loss for yourself. You can determine that by proper metrics like support and have a framework for yourself to it. You can go by a percentage and say, okay, after, let me put off the magnet shortly. Okay, after 1%, which is a bit too tight, if you ask me, those get wigged out a lot. But if you put like 1.5%, 2%, 3% and whatnot on the line for that position and say, okay, I just put it flat at 3%. And if it doesn't work, then I take this L and try to understand why I should have not taken this trade and then move on. And then it is what it is, right? It's then part of the learning, and you invest in yourself with a tiny loss rather than hating on the world that your Lambo trade didn't work out while you're learning. So yeah, these are the 3 basic conditions to have like a very easy idea for an easy approach to something that can be that there's a grasp on it, and that can be clearly communicated and talked about rather than just fictional ideas of 50 time frame matching or RSI divergence, which I'm a big fan of. I mean, I can show you quickly, but it's not part of the framework. If you don't know what that is, RSI divergence, it basically gives you a bit more context about your timing, acceleration, and steam or strengths within price action. And that can also help a lot to understand better is if it makes sense to take a long or not. So for example, I put this off here. Plot bearish, bullish, because we don't care. So what this does, it's an oscillator between 0 and 100. It basically puts you the strengths of price in its self-referential context of recent price action. So it basically shows you momentum. And as you can see, as if it can only oscillate between 0 and 100, and it never really reaches those values. Most insane values are already like 11 or 10 at the lower end is like crazy, crazy, crazy on any time frame. And the higher end is 90, but usually deeply oversold is already like 20, 30, and deeply overbought is already like 70 to 80. And if we were to have this situation in the very highs, just for the record of trying to explain why I like RSI, let's say these lines were over here, and this price action was in the context of this momentum over here. I would the fuck not try to long this, because the chances of hot knifing through coming from such an overbought context here is much, much higher than when it's happening down here. So, I mean, that's not what did happen, but for you to understand why I like RSI divergence and share about it a lot and talk about it a lot, to me, it gives the extra grain of time sensitivity unrelated to the framework, to the base framework, which is totally valid and solid. But just for my own personal edge to get this slight little extra of confluence and confirmation of, can I take a trade here with good chances of coming out ahead after I found, after I can say like, okay, check, I have FIB trade created, check, I take it near support, check, I trade the front side, I trade the back side on the front side. And I have all that, and now, yeah, okay, let me check a bit more because I maybe want to put down even more money because it looks like a super solid trade. And now I want to make sure that deploying much more capital makes sense to me. And now I see, yeah, okay, we have a very, very decent momentum build up here. It was massively oversold and it's still super low. So the chances for me of getting any form of exit here coming out of this is extremely high. So the concern of deploying more capital or putting more leverage or however you want to approach it is pretty solid and justifiable. While compared to something like this and doing all this here would be, okay, I can take it and it might work out and will go to exit and then die. Does happen, yes, but the chances of coming from this situation going into this price action and then the other circumstances and then happening actually immediately rather than doing the fallout before and then going back up. It's just different. So that's why I say this gives a very good context. It's also very beginner friendly with a bit of exercise. You get very used to this oscillator and understand it very easily. And you get an idea of how it puts the time component very well into the context of the raw up and down. The time component on the chart only goes to the right, but it doesn't tell you much how deep it goes down and how deep it goes up on itself about the timing and the momentum. So that's what RSI gives you there. Other than that, that's a very easy and very good example of how to approach and find setups. You can do that on any time frame. As I said, the 4 hours very good to give you breathing room to find those trades, let the candles play out, then let new candle closures happen after you took a trade, and then only on closure really decide if you want to hold on to the trade onwards or if you want to close it because it reached your definition of not being worth it anymore. That can be either being down on your trade by X% or hitting certain levels. I don't have a very good receipt for stop losses myself. I don't use them myself, to be fair. Only I usually use them in profit because I tend to take trades that I will most likely come out ahead in profit. And if I'm not that convinced about my trade, then you can bet I'm non-stop on top of the charts and taking all the time frames and all the metrics that I need to stick to the conviction, and it can take 2 or 3 minutes until I'm okay, fuck this, it was not the best setup already, and I found 3 of 10 things that I don't like, and now I pull the plug, take a tiny L on fees, and maybe it's already a negative, and then I manually decide it. So that's why I basically never take stop losses automated on a rule-based framework for myself. Yeah, it's just because how I handle it, and when the price runs away in profit, let's say you longed here and then it goes up here, it hits that fib level from before, that blue line, rather take 50% profit, and then I put a stop loss above my entry, and then let the chart go for a bit and see what happens. Maybe I take more profit here, let the rest run, and then yeah, let the chart develop. You know, that's also a very common strategy. And then just peacefully have all the profits, and there can be no losses because my stop loss sits above the entry. And yeah, so that was a lot of chatter. I hope that helped. Thanks for your question, Chido, in the question forum. If you have any follow-up questions, then let me know. Feel free to post it. I don't know if you guys have questions immediately onto this, refreshing and then going through this, or any comments, or if something was not clear maybe, then please let me know right away and I'll happily answer. Okay, it doesn't seem like it. I close the chat for now, so the recording is a bit bigger on the video, but I then check in on the chat, or just speak up. Don't be shy. You can interrupt me in a second, you know. So, all right. Let me take a zip while I'm reading the next question. Okay, so Auto had basically a very similar question. He was asking, basically looking into how it all connects through different time frames, maybe like a checklist, where to start, what to look for, where it will go. So how to work from A to B to C in a structured way. This could counteract the overwhelming feeling of too much information when you go through multiple time frames and see all the fibs. But yeah, he says he's basically unsure, you know, where to start off. And yeah, that's totally valid concern, and I guess a common issue. Always like, where do I start? Basically, as you can already see here in my watch list, I already have it like split up in monthly, weekly, daily, 4-hour, and flexible time frames where I constantly rotate through all time frames that are necessary for me to investigate whatever trade I'm looking at and go through the time frames. If you have like really no guidance and no idea for yourself of which time frames to start off with, then I actually cannot recommend much more than the ones that I already mentioned, and they make perfect sense to start, you know, because the monthlies are very strong, then the weekly is very strong, then you get the daily, naturally goes over into the 4-hour, and then somehow into the 1 hour and 15 minute, depends on how much you want to add. What I then can just recommend is using different colors for your lines. So yeah, we don't have a lot here on this perps feed on Solana right now. So maybe go here or here. Maybe Bitcoin is a bit better just now for the sake of the example. So if you have the monthly time frame and you start to draw it out before you go deeper and find a scalp or a tiny swing trade, then you would, what do you know, start somewhere at a break level nearby your prices, or break levels nearby your price, that way around. So that would be, for example, these three. Then this here over also. This is basically the origin, and this is just another break level. And yeah, you could also take this here into account if you want to, but it's all kind of far away. And then do the due diligence of actually properly naming them, so that if you dig down into the other time frames, that you're not getting lost of which line is which one, if you don't want to pull it off memory at least. So like this, I cannot edit the text on all of the lines at the same time, only use templates to do it. Whoops. So I can apply multiple templates. If I hold Control and click every line one after the other, then I can apply templates to all of them at once. But I cannot change the text manually, which to me honestly doesn't make any sense to the application developers from TradingView, but that's, it is what it is. So naming then the lines properly, so you don't get lost if you zoom in and go down the time frame. Whoops. And then you can go into the weekly. Oh, so Charters fan commented, in his opinion, take 60% at the first appeal, lock in more than half, because that's a high probability. Absolutely fair and right. For beginners, I would just say take 100% and take 50% even halfway through to the TP1, just to make sure while you're learning that confluence gets built with making gains and being right, So taking halfway through your actual exit sum off and then put a stop loss above your entry can already help you a lot to actually get off the ground. So I'm perfectly aligned here with you that at least taking 60% at the actual exit should be advised. Just for completion, I try to add, if somebody's already spinning in their head, okay, but I can do this and I can do that, I want to take the wind out of the sail. Yeah, that is all an option, and taking at least 50% or some percent at the actual exit and let the rest run is an idea and valid idea, but maybe don't start with fancy min-maxing ideas before you even made your first successful trade based on the rules with actual accountability to following the rules and everything, and then having that success. So that fanciness should come after having a series of understanding what you did and that you did it on purpose and that it worked. Hockey 6 is asking, I'm new to this style of trading and came in late to the live stream. Will the new website have beginner videos, or would you prefer to start somewhere else? We have already beginner videos. The website will definitely have them referred one way or the other. Funny that you ask, I'm actually rewriting the welcome message of the Discord, because this question you're just asking right now is just perfect, because it sums up the reason why I was rewriting the welcome message. Just getting the details fixed and some disclaimers in, and that it's very comprehensive with a lot of information, and it will directly in your face say where the starter videos are, the beginner videos, and refer to all sorts of things. So bear with me. I will share them later anyways, now that you asked it. But I hope for the time being that answers your question. We have them, they exist. I will refer them later in the chat, and we will make it more visible to everybody, either through Discord and the website to find it. Yeah, so now we went from the monthly time frame down to the weekly and basically redo the same process, right? So what do you know? The monthly here is also a weekly, so we can basically just, instead of adding 2 lines, take the same line and yeah, have it in the same text, that it's both. Then add the other lines for the break levels, nearby price of things that make sense. Maybe this one and this one here and this one here. Whoops. Damn it. You know what? I can actually use the copy function instead of doing it over and over again with the text later on. So that would be smart. So let's be smart. So I have a weekly line here. I delete this one. And if I keep Control pressed and drag the line, not click it, because then it doesn't work. I keep Control pressed on the keyboard, and when I drag it, I immediately duplicate whatever item is on my chart. So that's how you can also quickly get new shit on your chart if you need the same thing over and over again, like we are just doing now. So I don't have to edit the text later on constantly. I just need to put it down there and then move it to the right place. So there we have a break level. Whoop, whoop, whoop. There we have a break level. There we have a break level. See, that's like, you can already see how those lines and areas at times keep stacking and stacking, and it's then fantastic to understand and read how you find really good support and resistance areas to get confidential trades pulled off with high probability of playing out. So did I miss any? Yo, there's one sneaking here. But I guess other than that, whoop, nothing nearby of relevance. So now we have the monthly and the weekly break levels visible on site, and then you could go to the daily. Just be aware that it eventually could become a bit messy because of labels overlapping. So that's usually why you don't see it on my chart, because if I add every single label like this now, and I go down until the 4 hour, 1 hour, 50 minute, then I can't read shit anymore unless I zoom out like super crazy, but then I don't see the chart. But for an overview chart or a nearby chart, that's actually perfect to do it. Or try to group them up and draw like a box if that's more feasible to you, to have like the upper boundary and the lower boundary of the box between the two. And then you know for yourself that's the support area. Just an idea for yourself how you could do it to make it more readable. The basic question was still, how do I go from time frame to time frame, and which one will you start out with? And yeah, that's basically the answer, right? Monthly, weekly, and daily. And so if we were to draw out the daily just for the price that happened nearby, you can already see how the daily sits right at the weekly, and that's for the simple fact that the rejection happened at this break level. So you will find that a lot if you start overlapping from higher time frame to very low time frame, that eventually you have like 2, 3, 4, 5, or 10 lines at the very similar place or even the same place. And that's for the simple fact that the actual resistance was created over here on this weekly break level that locked in here after the closure. And after it got lost with all the shittery and crashing, it found a footing down here where we longed, and it finds a resistance, and it finds a resistance at this break level. So it creates a new one on the daily time frame, yes, but it's also simply for the fact that it did what it had to do by rejecting on resistance, you know. So now we have this daily here. And as you can see already, like, right, the labels are overlapping here. So it's for you to decide how much you want to put then really on, how nice you want to differentiate between of those. And for an example, how I do it, I usually add the weekly and monthlies. I don't label them, but I rather label other time frames that are, to me, not easily readable, of what time frame that would be when I look at the chart, and then I put the label on, so that then I inversely already know everything that has no label, really, that's higher time frame resistance or support from those levels. And yeah, that's one way to approach it. It's basically how you organize your own chart and readability, which doesn't actually address the question of how to even go through the time frames and which one to decide to take. So check. If that makes sense to you, I don't want to ramble only. I actually want to give understanding of how to make sense of things. So if it doesn't make any sense, then let me know. I try to explain it differently. Chip, chip, chip. So that would be your current context of monthly, weekly, daily. And as you can see very nicely, if we pinch in a bit or squeeze in a bit, you can already see how the current build support is basically a spin-off from the prior created support levels as much as the resistances here, right? You had like 1, 2, 3, 4 rejections on the weekly break level. It created then also a daily break level now. And yeah, and now you have a lot of lines stacked and a lot of pressure building up, a lot of support here, a lot of distributed resistance here, but it's still there. And you sure has a fuck ton resistance at 74K. That's why you probably read that number many times in chat when I talked about it. Maybe not the specifics of why that number is, but now you have a better idea of why this number is there, because what do you know, that monthly, weekly is also a daily over here. So, I mean, not in this exact per dollar, but yeah, it's very close enough. Or was it over here even? I know I pulled it from somewhere nearby on my chart, but it's basically the same level. And well, you know, it's also the whole range low, so it makes sense that the support resistance flip will happen there. And now you know how you can find those and why they are strong, because they are on many time frames. This will be like a break level just now, and this makes it a huge rejection zone. And if it goes a bit higher for other reasons, then it will find a footing probably at 84, between 80 and 84. If enough shorts build up, they will find a way to bring it up there. But until that, that's a long TP or short entry with little questions. So now we have those support and resistances stacked up around the price. And now if you would go down and be on for a hunt on a setup on the 4-hour or 1 hour, then you have like boundaries that makes it a bit more easy to be aware of, that you have supports and resistances on those various time frames, higher time frame, monthly, weekly, daily, being present at all times while you are at those lower time frames, and that you should be aware of, right? Because I mean, it's not voodoo if the lines and the candles then actually follow those lines, and that's what makes it just pure chart porn to have this framework developed and follow it. Is we have that monthly break level here coming all the way from, what is it, 2024, 2023, I don't know how far does it go back. Fuck that, yeah, that's 2021. So from 5 years ago, and you can see as of today that this break level, by no coincidence, gives very strong rejection again after it has also built a daily here. So now you have two resistances, a monthly and a daily at the place, while you are looking for a 4-hour trade, maybe, you know. So it makes sense to have a way for yourself to differentiate them. I prefer white lines and yellow labels, but I see people who use colorized lines, so they have one color for each time frame, which is perfectly fine because I also do that, but I do that for trend lines only and not for horizontals, because it's, for me personally, better works on how I just have an eyesight on the chart, right? That's basically it. There's no right or wrong. There are many options. But I have basically for the trend lines, if I was to cycle quickly here through the 4-hour and find the uptrend, chup, 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 chup. That goes here. Whoop. Does that hit? Yes, it does touch the corner. Go here, there. Oops. Now I lost track. Fuck. That was here, and then here, and then here, and then here. Okay, so that's your major trend on the 4-hour, just from this low. And yeah, the trend lines, the rays, I have templates for them, and 4 hours are, for example, orange. And I would go like this, and then actually differentiate that for myself like that. If I was to draw out this chart new, that doesn't touch it, that doesn't touch it, that doesn't touch it. That's even not a downtrend anymore. I was looking initially like this is not downsloping. Okay. So that's a downtrend, and hey, what do you know? Perfectly rejected also off of this, so maximum chance for resistance here, right? So to at least pull off a short doesn't mean that's the top, you know, it's not never really the idea when you put down scalps or get a swing trade in, or there are many ideas how to approach your next trade. Nobody's saying that this is the final top to being prior the final top. It's just finding resistances and trying to TP, trying to TP at resistance, or enter new shorts at resistance as much as you TP shorts at your potential next long entries, so supports, etc. pp. So rejecting here for all of those reasons has had a very high chance. So you'd either want to already be out of your trade there, take good profits, enter a short there, etc., etc. As I said, many ways to approach those things, and yeah, you had good reasons. And it's again not hindsight magic. It's just how you, based on the framework, cycle through the trends and the candles and how you draw trend lines properly. And I didn't make that up, right? I just look at the rule of finding the accumulation candle after the next accumulation candle on the second anchor, then have this full body here above this trend, which means the trend moves, and that's then your major trend in play. And what do you know? It rejected off of it. So it's not like, okay, let me find a candle that now I can tell the audience that looks good and makes me look cool because I have the voodoo. No, I can tell you the rule and I can repeat those rules endlessly to you because it's just how they work and how you do it accurately. And there's just so many examples how you can immediately see the impact of the precision if you learn what we try to share. And yeah, and then you find many examples for yourself how true this all is. Okay, I'm rambling. So orange is for me 4 hour, and daily is for me, for example, light blue. There's no specific reason why I do that. It just made sense to me when I chose those colors for the different time frames. So let me do the daily just now, order to your question, and then you see the difference. So if we close in distribution today, which has a, yeah, it can happen still that we close an accumulation, but let's pretend this daily is already closed. Then I have 2 daily uptrends, the main trend and the interior trend. I choose both lines. Again, with control, I clicked both lines. Then I can apply to all lines a template of my choice, of my choosing, and then change them all at once. And now you can see already how it's easier to differentiate of which time frame related the trend lines will be. And we don't actually have a lot of downtrends here in the lower range build. I can do that from here, but that would not be really honest. So let's start from up here. Up, up, up. This candle and then this one. Okay, so this is your really major trend, at least from this peak. There's obviously an other high, but for the sake of the example, we go from this one. Then we have the interior downtrend from this major trend, cycling through the candles. Does that candle touch the trend line? This candle here in question, does it touch the trend line? No, so the trend gets moved over here. Then the next one. And this one doesn't touch either from yesterday's closure. So that's your interior daily downtrend. And you can do that with the weekly and the monthly. And if you check my templates, you see that I have it. Color-wise, I guess weekly is like burgundy red or something like that. Yeah, and monthly is, I guess, purple. No, yellow. Okay, I thought it was purple. Whatever. So this is the daily. And yeah, that's much easier for me. Now I have, let's imagine I have the weekly and monthly in place. You get the idea to how to organize it and how to go through those time frames then for yourself. Now that when I go on the 1 hour, I can much easier read. Yeah, it's a lot of lines and it takes exercise to not be like, I get lost in all the lines and don't know what I'm doing or what I'm looking at. Yeah, just get to the point that you even get the lines properly at the right places, and that's already a big win, and the rest comes also over time. But now I can also much easier differentiate of this resistance and this resistance being daily driven and the orange lines being 4 hour driven while I'm on the 1 hour time frame, if that makes sense to you. While I'm not caring so much of have different colors also here on the horizontals, because that then even for me would be like sensory overload. If I put also now like, I don't know, green, blue, orange again, and then purple, and then I have like a whole fucking rainbow in front of me. So I keep it all white and have the information of what importance that line is on the right and easily readable. And as I explained earlier, I don't actually put the labels on And for the fact that I put a label on, I know that it is a strong higher time frame, horizontal being a weekly or a monthly. And if I cannot remember, then I'll just scroll to the side and check quickly, and then yeah, okay, yeah, now I know it was a weekly, and just to make sure because it's relevant. Other than that, it's just the line is there, so I know it's a very high time frame line of relevance that I found, and yeah, and then if I want to add a 4 hour, then I add it, and then I put the label on and name that single line 4 hour or that single line 1 hour. I hope this makes more sense now, Otto. So a very long answer again, but I hope that makes all more sense now, how you can approach the timeframes after timeframes. And other than that, as you already know, probably all of you, there are all the timeframes, they are all relevant, 2 day, 3 day, 5 day, etc. And it can be overwhelming and confusing, but don't stress yourself out about trying to be aware of every fucking time frame. It's impossible. The algorithms that are driving this are aware of this, and it's probably hyper complex how they print the chart in candles after candles. It's already a huge edge to know that it is a fact, and a matter of fact that that they are having the information of all time frames and also these 100, 200 days and 300 days. You will freak out if you try to draw them all out, and it will not get you anywhere. You already get like super good information if you draw properly in the first place and then choose a few time frames that you think work out for you. Because it's also fine if you think like, okay, the 5 day has a lot of trades that work for me and have a lot of engulfments, have very good trend lines that I can follow easily, that makes sense. And then I have the 10 day or the 13 day, whatever. That goes by investigation and finding out, I cannot tell you, hey, from the 365 timeframes that are only within a year, not to speak of year overtaking the timeframes. There are like infinite options to compose. But well, being profitable just by going monthly, weekly, daily, and then sneak peeking on all the time frames you can see here and that I have saved here to check more. That doesn't mean I draw out the 17 day right now or the 43 day and be always aware of it. It's just rather, okay, I want to find higher time frame engulfments. If I cannot find a higher time frame engulfment right now where the price could find a higher time frame short as a resistance or a higher time frame long, then I will naturally start to go over the time frames like you see it on Sin.C's daily updates. It's just that he covers every day all closures and he has all the alerts for all the time frames for himself that I know. So it will pop up for him anyways. He sets and forgets it, and then it's just gone, and eventually a pop-up comes and it's like, hey, 173 time frame long just checked in, and then he can look it up. That's totally up to you. I myself have monthly, weekly, daily for the most part. I account for the 5 day more often than not, the 2 day and 3 day just to see the very short term or next daily closures, how they are affected. And then if I cannot find any engulfments, then I just start to go over the daily timeframes until I find something, if that's what I'm trying to look out for at the moment, if that makes sense to you. But as a base framework and boundaries, you're perfectly good to go with the monthly and weekly, and then daily, and then have those boundaries to be aware on the 4 hour, 1 hour, 50-minute, and whatnot. Always depends on what you want to do. You can also be like an investor only and super higher time frame swing trader. If that's what you want to do, then find your proper highest time frame to find high probability bottoms and tops, But if you're just trying to range trade and trying to exercise and learn, the proper charting that is applicable to all the timeframes, then you're perfectly good to go on this tiny range that happened since beginning of February, and start charting out on here, drawing out on here. And then it's just a matter of figuring out how you want to organize it for yourself. And then the simple answer is the obvious one. If you did all this now and you cannot get any information out of this, then either one of two things happened, or both. You didn't follow the charting rules of how you cycle through the trends and how you set the break levels really. Or second, and more likely also, that there is currently no trade for you on your time frame set. And if you're then like, okay, what am I going to do with my time now? Yeah, what are you going to do? Stare at the chart where there's no trade for you right now? Go touch some grass, or take your time if you want to exercise and pick a new set of time frames that you think might be of chance or have a chance of giving you a trade, because the rule set never changes. It's just there are so many options, an infinite amount of options actually to combine all the time frames. Being aware of all of them is almost impossible. That's why we have the bots and the database and the alerts and everything that are monitoring this shit, because human being is perfectly impossible to even only track all the engulfments and all the time frames. Even within a day, there are 720 time frames within one single day, or what is? Yeah, I guess that's a number. So try that. You're going to be crazy. You just get crazy and get nothing done. You won't even pull off a trade if you try that. So the rule set and the boundaries for those rules don't change. And like Finn likes to say in his videos, more often than not, I guess, how lower time frames are then affected by those higher time frames. I guess the most famous last example is this 344-day engulfment. Yes, it's a huge thing. It's a huge engulfment, and that 6-month engulfment that we had prior and nobody wanted to hear outside out of our scope, and it was perfectly right again, and it did trigger the short and fucked the chart over, and we knew this was coming. It's good to be aware of those, but the 6 months engulfment, as much as the 344 engulfment, is less likely so immediately affected by charting out your nearby monthly, weekly, daily, and 4-hour and your range. Is much less likely to be affected by that than you might be afraid of. Because I get it, it's overwhelming. It's scary if you think about all those time frames and options. But take a deep breath. Choose 3 or 4 time frames, like the ones that I told you. Then if you manage to master drawing those out, then you already made so many steps right that you even got there. Props to you, then you did it. And if you now have spare time and really want to exercise, then for the fuck's sake, just choose any, roll a dice, apply all the rules again, draw the trend lines, draw the break lines, call them 11-day, 32-day, and then 4-day, if that's what you choose. And then you're going to be surprised how fucking identical the trades will pull off out of these boundaries and sets of rules, which is the crazy thing. That's how time and candles are fractal to each other. And to find that out quite a while ago is astonishing, but it also gives you a little bit of calmness, because it makes you realize you don't have to actually be aware of everything that is there to be profitable and to have good charts and profited charts and consistency. And that's the shaking thing and the scary thing. If you feel like you're inconsistently navigating unstable rules that you cannot really apply to anything, then that's scary, and it's also not fun to learn and to journey. But then that's also because maybe we explained it not well enough that it's not majorly important to be aware of every single time frame. We just say it to share the knowledge that it is true, but it doesn't mean you have to chart your own chart all day like that to be profitable or efficient. All right, I hope that made sense. It was also a bit of rambling on the end, but it's very important and it's also a good question and I guess scary to many and overwhelming, and I get it. But yeah, there's no perfect answer to say choose always these time frames to be always right, or choose always these time frames, or otherwise you will be wrong, because that's not true. The sets of rules and how they set the boundaries for entries and exits and trend lines is beholden by the nature or accountable, is that the right saying? Accountable to the nature of the fractal behavior of the time component within the candles and the price, which rolls over through all the time frames. And that's how coherently the rule set can be interchangeably be applied to every single set of time frames, and it doesn't change really how you would approach it, because as a rule of thumb, the higher time frame is stronger, and you should be more aware of this. And as in this example, the weekly and the monthly is probably stronger than a 15-minute or a 1 hour or 4 hour as per reaction. And that then also works for if you, I don't know, choose a 52-day time frame and then a 10-day time frame and then a 2-day time frame, and you draw out the break levels, hold levels, and trend lines off of this, then you should also respect your drawing of that the maybe 2-day is approaching whatever 52-day time frame in that example, to then that have the trend there and the break levels there to be respected on the time frame, because relatively speaking your 2-day time frame is very small to the 52-day time frame. All right. I know it was a lot. It's an important topic. I guess I'm repeating myself if I keep going from here for the specific one. Unless one of you listeners have, again, an immediate follow-up question on this, then let me know. Okay, doesn't seem like it. Oh yeah, I have another question from Grimma. I will address this one and then I will probably wrap it up for today. But he's basically asking, he says it, and he probably wanted me to ask to explain it or think about it together. Is he said scalping high leverage versus building swings. Also highly requested topic. Also talked about a lot. I will try to find the videos where we especially talked about how to properly build a swing trade, because I found that was a very good session with a lot of people asking questions back and forth. It's already like 4 months ago that we did this, or five months ago. But yeah, the basic idea or the basic idea of the question is already the right approach. There's not one type of trading. There's not one answer to everything. There's not one chart to everything. It also always comes back and down to what you want to do, how much capital you have, how much risk you have, or your general risk profile and everything. And according to those metrics that only you and you yourself need to answer that. And if you have the answer for this, then you can actually think about the idea of which kind of trades am I looking for? If you're a day trader or you want to be a day trader, then you're probably looking more for scalpings or scalps. You can also swing trade on being a day trader because you can run multiple positions. It's all possible, and the base idea doesn't change. It's just more or less the time frames you navigate and you draw out change. If you're a swing trader, then you are most likely also already drawing out the chart that I'm looking at. But then you're more or less maybe opinionating on what's happening in the middle of all of this. Like, well, it sits right in the middle, of this whole range. So if you were a swing trader right now, whoops, that line is a bit fucked. Then probably all of this range, you couldn't care less. Maybe the upper boundary is not perfectly fire. Let's say, let's redraw it just. Let's keep actually why does it slip to the upside? Maybe because of the magnet. Okay. Yeah, okay, that's better. So if you're a swing trader, you probably couldn't care less about anything that happens between here and here. And you would only care really for the price extremes within the range, being down here. So if we were to color this, it's a bit aggressive. We have a nicer color. Nope, that's not cool. Yeah, let's take this one. That's okay. So if you're a swing trader, you probably couldn't care less about anything that happens basically in the middle of the range, and even of that middle of the range, you're again sitting in the middle. So for you, there's like no action taking right now and no caretaking whatsoever. So you would all basically set alerts for yourself on the upper boundaries, or if you have major trend lines drawn out, then you would also respect those trend lines as to be your next point of interest, which would be then up here. It's actually a very nice meetup between the weekly and the monthly, weekly, and the daily trend, just around here. And then the same for the lower boundary as for support. And then check the chart and be on top of things, and then make decisions if you want to long down here or want to short up here, or vice versa. TP longs up here and then short TP down here. So that's more the idea of then swinging. That doesn't change really the rules of how you draw it out, because it's give you the same boundaries of being a scalper. The scalper would just go now here with what is drawn out based on the question order already provided before, and then just allow himself to rotate through all those lower time frames, the 4 hour, the 1 hour, the 50-minute, and then see if they can find maybe a hold level based on backside retest on a running front side. Let's say we have this hold level here. We can check if that got activated. I don't think so. Yeah, it does not touch. So this wick here does not touch the hold level. I zoom in a bit more. So if you're a scalper, you have a very strong argument from the soul context right now that the hold level created from this engulfment and the entry at 66,800 to the penny, then back up to 66,958, that you can long this, because also your next support sits only like $78 below, so you have a very tiny no, it's the other way around. You have a very solid breathing room before even sweating would start, because the candles would have to close at least below here and then close another candle to confirm a loss of this level and to most likely invalidate your long when you start out and don't really want to hold to anything that got invalidated immediately. But it gives you a lot of time to even get down here to lock in those closures, and it can easily close then back up here and then actually go to your exit. So that's how you would scalp, but it wouldn't really change now on the boundaries of your overarching trend setup, break level setup, and hold level. I mean, I don't really have hold levels now here because we're just ranging and there was not a lot going on the weekly and daily as far as I'm aware. Maybe daily just now because we had a super pump yesterday. There's probably a hold level. Yeah. So good example, if we are crashing, I mean, that will not happen today, probably at least within the next 2 hours. If we are crashing, let's say tomorrow down here and hit the hold level, not a good long. You did not properly build a full range of 2 consecutive candles. I didn't exactly explain it like that earlier when talking about easy setups. But it's just part of building a front side really, you need 2 or more candles to even have a trend change. You don't have a trend change here. It's just a mega pump to get everybody excited on Twitter. But now when it will hit the hold level here, let me zoom in. I know it gets overwhelming and also a bit exhausting on the eyes with all the lines. So we have the engulfment here. Check on the number 1 because trade got created. Number 2 was now I even forgot what was the number 2. Number 3 was backside trading on the front side. Forget my own text boxes. Number 2 was near support and resistance. Yeah. So you could argue that it is nearby support, but coming off of the break level, it's also not really from this range. It's just nearby that weekly break level. So we have a check on the second. It would fail through these levels, and then you would have a very close look on if it hard closes that while hitting this long entry. Nonetheless, not a good long. Just take that right away if it starts dying from here and hitting the long entry because you didn't build a proper range and a full uptrend, then a sideways, and then dying through a front side, trading then the backside, as you remember. So that's a long that will play out eventually. But if your first and second rule is capital preservation, and then alpha next after this, so managing your risk properly before you try to hit the next gain, then this would not be a very great long without any context to hit right away. You can probably long it given what I'm looking at, but if the idea is to talk about beginner setups, then if we were to go there from here now, then probably not a good long to look at. So that being said, back to the 15-minute scalping. What Grimmer asked. We have a hold level here. Oops. And we have a break level here. So, and then it's up to you how far you want to draw it out, right? Because we obviously have a local top. You want to make sure that you're not taking trades where your exit is behind major trends. There are more and more nuances and important nuances, and you learn them as you go. but you have to have base rules that should be iron fist hard as a base rule set, and when you have them branded into your thinking about charting and taking trades, then you can think about being fancy, and then you can think about how can I optimize the trades actually even better and better, and then you find those answers, and then you will ask things, and we will exchange about it, and we give you all the ideas how to fine tune even more and more and more, but it takes time. There's no shortcut. There's no hit Lambo soon and take this and you are set for life. No, it's honest work, but it's also something that works. So it's worth your time if you have it and you're actually excited about learning how to see through the matrix, then that's absolutely something you want to understand over time and learn about. So let's check in the major trend on the 50-minute. That's like this. I call it 1 hour, but it's just a gray line basically. So if I have any time frame I'm just looking at, I use gray lines because they are easily distinguishable for me from the colored lines. And when I'm not drawing it anymore, then I also really delete it. Otherwise I have like 50-minute, 1 hour, 30-minute lines on my chart, and then I am just confused and don't find shit anymore. But if you were to scalp, to answer Grimmer's question, you can have the same boundaries from what we've drawn out before, or whatever time frame set you have, and trend lines and break levels that you feel comfortable with to have drawn out. And then you can scalp that anyways, because as you can see it, we have like a 50-minute time frame here, 50-minute downtrend here as per this time frame. And there will probably a short coming around, it's not really affected by the other stuff that you have drawn out, but it's very highly likely that there will be some form of rejection from this trend line plus this break level on the 50-minute. If I go further to the left, I will probably find even more that would justify exactly the same level, just like this. And then probably if I go even further there's these two candles. Yeah, two candles. Hey, what do you know? It was used as support. Haha. Now support turns into resistance. So we have a very strong argument that if you were to scalp this, you're already going through a weekly break level. A weekly level can only be broken finally on its own weekly time frame, but it gets still strong reactions on all lower time frames below. And that's how you need to understand and learn how to understand those lines for yourself is, yes, it can go through, but the chance for the weekly dragging the price back down as to be resistance much later, because Sunday is not today or not tomorrow, but latest in 3 days. That you have those lines also for that reason. It can get immediately hit as strong resistance, and if it matches several other price points for resistance like trend lines and break levels just now, cool, then very good chance that you get a long or short off of it depending on your direction. And also for looking into the future, how long you want to anticipate your next trade, because you know that price is running into this level that is relevant for upcoming Sunday. So you can actually also plan for your trades if you think it through and respect what you are drawing out, and then respect it actually and give it credit, and not just have it like meaningless lines on the chart and, oh yeah, I did the rules and actually I do nothing about them. Then that might be just an issue of not exercising it enough, honestly, and then respecting what you've drawn out, because a weekly time frame can get a strong reaction on the 15-minute, but it's only relevant on every Sunday's closure when the next weekly candle checks in, and only then can this specific line here be claimed or lost. And believe it or not, if you are new, you will find many, 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 and many more examples where you sit there. If you're nerds like us, you're at the Sunday closure, you're watching, and the price is like fucking literally doing this. You have this weekly break level, and the price is battling and battling, and the algos are battling, and they are like ninjas fighting, and then wow, mega pump. Then it's 3 minutes on the clock before the weekly closure, and then and it goes here, and then wow, fighting again, and then it goes back up, and then 30 seconds back, and you think, oh, it closes above. Oh yeah, we claim that weekly time frame, which would be significant for whatever example. And then 5 seconds before the closure, it actually goes here, and then here the weekly locks in, and then fuck that shit. And that's when you read in chat, that was a sneaky closure, those bastards. And it's relevant. It sounds like tinfoil hat, but believe it or not, it is not tinfoil hat. It's part of this whole machinery and actually precision of all those algorithms, because you gotta think that all candles that exist today got produced by that highly efficient machinery of algorithms following their rules, producing the next candle, you know. It's not like the candle now is just there and then the line comes somehow and then the rules are like anyways somehow whatever. No, every single candle, depending on the factors of liquidity and the trend lines and break levels and hold levels, are self-referential and in context of all the time frames. And that's then also how they produce the next candle, and that's why you get trades off of them. So yes, in fact, it is fucking important if in the last 5 seconds the weekly closes above here or under here. And the more you exercise and the more you actually understand what the framework does to you and how it helps you, you will then actually eventually turn into somebody who's like, oh yeah, obviously it's super important that the candle has closed here instead of here. And now I get it. Why, if you hear it the first time, you'd be probably like, that sounds a bit much like blood magic or voodoo to me and conspiracy. Nope, it's not. So if you learn it, you'll get it, and it's pretty amazing. And you can even see the reactions, you know, on the 4-hour trend line here. It's like the precision to the penny. It's see how you get support bounces here, and then after it gets lost, it gets rejection, backside retests here. I don't even do anything. I just say the rules are like this. Then I apply them, and then I go to the time frames, and then you can see it blue and yellow against orange on black. How true and how correct those things work all together. And only after the basics are learned, the real edge you will gain with exercise and then understanding the nuances of when those trades are more likely to play out in a timely fashion, or also have, and in general have a high chance of playing out from entry to exit from here, compared to that very early example from 1.5 hours ago, where that 4-hour long fell through anyways. It will go to that exit, but we don't have a claim for time, so does not the chart. And so if it takes a couple of weeks and months, you don't want to have your capital allocated to that long while waiting for the exit, and you actually want to take good profits, solid profits, safe profits first and quick, and then have the money free again for the next trade. So yeah, other than that, I'm probably repeating myself. I'll just add Grimmer, Skype high leverage versus building swing. I don't recommend high leverage. I would not recommend it at all. Anything beyond 5x and 10x is not at all recommended to anybody. When you're starting out, don't use any leverage, use small position. And yes, if you see those 50 and 75 and 100x leverage trades, yes, you've seen them, me sharing 75x, but you don't see them me sharing non-stop. Where did I do that? On Bitcoin, I did it on the absolute bottom. I waited and waited, patient, and I patiently waited for the setup, and then I pulled the trigger with a 75x, like in $200 range of the actual bottom, and then I hit it, and then you bang actually the profits on a very high probability trade. If you do regularly 75x, 50x, 25x, or even 10x, then you're fucking gambling and you're not trying to trade. And if you're doing that, then please do it with a lot less capital. And you know what? Doing 10x at $100 is the exact identical gain and loss as doing absolutely 1x, so no leverage with $1,000. You gain the exact same money, you lose the exact same money. It's just the thrill, and it's actually no difference. And if you're over leveraging your capital, so your whole folio constantly with the 10x, then you set yourself up to everything to lit your whole capital on fire, which is probably not the best attempt to do so. So why even think about 25x if you cannot even determine a trade for yourself? So how do you think that 25xing your non-existent idea is solid, you know? So maybe learn to find the trades first, get the confidence in, and then when you're like, oh my God, I finally get it. I finally find the high convincing trades. Now I try a 10x because there's a very high conviction trade at the absolute top of the resistance, and the chances of going 10% up from there are super limited. Same as for support longs, going then 10% down there without getting any profit has a very limited chance for however you decided that on the chart. Work yourself towards those numbers and don't start at those numbers. You don't get rich quick. You don't get Lambo gains by that way. You only get, okay, I need to apply for McDonald's and janitor jobs next because I actually burned all my money in perp trading and was told by Marty Party that infinite gains was known to be coming. You don't want that. You want to actually set yourself up for long-term gains, which can be gained with scalping, swing trading, investment, all of it together. High leverage, low leverage, low leverage, maximum capital, high leverage, medium, limited capital. You can combine all of it. You can go super crazy with all your variations and all your time frames and go like super nuts. Combining all of this, but like trying to hit it 25x, 10x while you're learning. No, don't do that. Interstellar Wanderer is asking, could someone only trade, hold, break level? I feel that could be a repeatable edge. Yeah, I mean, I would actually add the trend lines here because it's simply better and it's also not that hard to learn. But sure, trading the hold levels is basically the most basic. Yeah, it's the most basic idea of a FIB trade being created that has a hold level, and then you go from the entry to the exit. The entry being the 1 point. If we go to the 4-hour again, where was it? I'm on Bitcoin right now, right? Long was on Solana. So this is your hold level. The hold level gets created on the engulfment, and it It says nothing more, but I guess Sin.C gave birth name to this line being the hold level because the price holds there and it keeps up the candle that hits the support and it holds it up there, and uses it as an support and then long, and same for short, for resistance, being like the price is held there by the resistance of the hold level and then goes from entry to exit. So yeah, you can do that. And as you, I don't know when you logged on TSLA Wanderer, otherwise I upload it later and then you can watch the recording. So where I explained basically the first three basic steps of how to define beginner trades that are repeatable and understandable. Where I showed like you have the break level here, the hold level here, the backside being traded then on the front side here. The backside and front side don't produce any new lines. They can produce trends, yeah, but on themselves they don't produce any lines. But what they do is they give you the context of how the time has passed while the new candles print and how when price falls, it falls properly into a fully built out range and it falls into support. Same as then again when it pumps, how price runs into properly built resistance and then reacts to that to doing a short. So yeah, you can perfectly trade hold and break levels. You can trade them on their own. That was the word I was looking for, on their own. Just be aware that you're just taking yourself a bit of opportunity of a bit of context to optimize it. I'd say give it a go and then see what results you get. If you're, again, small positioning with a new strategy, then you're also not losing a lot while you're exercising it, and then see how you come out ahead. There is a way to do this, for sure. Now you got to bring it to the execution layer and then see if it's enough for you. And if you find out you actually want a bit more, like the trends and whatnot, then that's your answer. But if you're hitting one successful trade after the other, then who am I to tell you, come on, you're doing it right, bro. You have to use trend lines. You don't know it. No, the system that makes money is right. And part of the system is your comfort zone, psychology, capital, risk management, all of that. The thing that I'm talking about is just pattern recognition on the chart and transforming it into rules that can be communicated to others that they can follow up on. But I'm not in your shoes, I'm not in your capital, I'm not in your daily life, and all those components affect your daily trading. So if you find a subsequent rule set of what we try to explain, and it works for you, fuck yeah, then go for it. Cannot encourage you more to do it, Rear window blue. If one have to take a short position on stocks, say Tesla, NVDA, what should one be looking in a chart to increase the odds of winning? Yeah, basically everything that we're talking about. The good shorts on Tesla. I don't know if you were there at those times, but talked about it a lot during the tops. They try to build a bit support at the moment and give it a bit of chance and ideas to actually snag those juicy shorts at 530. But it's also not surprising if it will not do it, So the rules don't change again. The only thing that fucking sucks with stocks really is that their candles are so broken and unprecise. And it's actually pretty annoying to draw on them and get like super good precision. It still works. It's okay for break levels. It's fucking shit for hold levels, to be honest. And trend lines, hit or miss, can work. I mean, we see some form of trend here, and your common YouTuber would do like this, like, oh, that's an uptrend, and be like, something like this, something that for the eye is okay, but we are not eyeballing precision, we are executing precision, and that's where the difference in the money is made. So yeah, what am I going to tell you? I draw out charts. The rules are the same. I draw out stock charts. Especially lately, I'm chatting a lot with one of the community members about silver. I'm very happy that Binance finally added perp feeds because they have a clean order book. But if I go to my Tesla chart, I'm very old-fashioned on Tesla, and I still called the top theirs. And I'm very glad that one of our mods hit that. Oops. Hit that all-time high exit by a few dollars. I have this chart almost unchanged for almost 2 years now, and there's not a lot to change because yeah, it's super slow. Just have to observe minor things. I can draw out all those trends and break levels on Tesla, but it wouldn't personally add a lot of value for myself because the numbers wouldn't change. If you were to do it personally, then I can just encourage you to do it. And if you did it, then feel free to hit your questions in the chat after you did and share your chart with me, and then we can go over the chart, and I can tell you how to improve. I can do it fresh right now, but I would also just repeat the exact same thing that I'm already rambling about for 2 hours, and I don't want to bother you guys with doing the same things over and over again at least within the same session. For your understanding, if you were to draw out the Tesla chart, then you find your highest point, and then you start based on the rules that can be seen in the tutorials and other sessions to draw out your trends. You start on the first peak top with a fully deployed range of 2 consecutive accumulation candles. You start your downtrend here, go to the next candle for the anchor, and then start to actually cycle through your trend lines and draw out those trends. You could see how nicely the price followed in between here. It already hard closed above, so we get a move. I mean, you have a very easy take on it's hovering above support, but it's always how it is before it falls out. So it's also badly stuck under those downtrends, and it didn't fully cycle yet through 6 counts of downtrends. There's this rule of thumb. If you chart more, that downtrends eventually will get terminally breaking as much as uptrends if they have six times breaking their trends. So if I was to go back a bit where this initial trend line was sitting, let me delete it and just draw out again. Then let's see how many counts we got. Wait a second. can add more break levels here, but I leave it for now because it's only relevant what's nearby. Yeah, it looks honestly to me like, because I feel like you're not asking how can I properly chart with Tesla, but actually asking about real price and numbers. And well, there's actually, if Tesla gets a decent hard closure below, yeah, that 4, zoom out a bit, basically below 45.79, then you only have those two lines left before there's not really anything, even on the daily, to hold it. If we scroll more to the left, probably find some. Let's see how those go. Yeah, I mean, there are some levels usually get at least somewhat of a bounce at such lows from prior high range highs. But it would also be relatively here a new lower high and a lower low. And that usually also kicks a lot of algos off to then follow the downtrend even harder. This is honestly a very good example where I would like to grab the RSI to see the timing and the momentum of all of this range and how it is going, because I couldn't tell right now, I just out of eyeballing it, if it already started to build some upwards momentum from going lower, or if that upwards momentum it have had was just a reset to then go lower. So I'm taking in the RSI now and would try to find a trend line here. The trend precision or line precision on RSI is not as, anchoring exact like the race on the price, and it's okay. Usually you find very proper and very precise trends anyways that are respected then throughout the whole chart activity. And yeah, this is it's a tough one because you can see it keeps rejecting off of this trend the third time. So it established the trend here, even locally, and it respected it here. If we go a bit higher time, or from the actual local top of this, going a bit further here, or like this, you could argue, okay, it broke out of this downtrend, then rejected off of it, and now it lost it again. So to me, that's not a whole lot of momentum and strength. And now it tries to measly be like, okay, I want to maintain those break levels here. So again, if you get some hard closures actually at those levels down here, and by hard closing I mean a distribution candles or a blue candle below those levels, then again those levels, then you actually will probably see acceleration to the downside, because the trend that is here established, the interior trend, got already also like rejected. So well, you know, you're in a downtrend and you don't escape the downtrend. So when the price keeps respecting those levels, then your next attempt for a short entry, I mean, I'm not a huge fan of shorting nearby the range lows. You know, you want to short in the upper range before falling out. So either it falls very low and you long it because you long support and you not try to short just above support, or you wait for it to lose and then you short the retest. Those are the two typical methods, and you should not try to overcomplicate it while you're especially learning this. And there's not always like 100% definitive answer, and there are exceptions. But as a rule of thumb, if it keeps rejecting, fuck this magnet, if it keeps rejecting like this, let me make that a bit more highlighted. So if it keeps rejecting the trend line, and now it reset the daily RSI also, that's the important part why I wanted to open it, not that it is maintaining support, also it reset it properly, that it has new room to go lower, you know. Every time it falls down here, it goes back up and rejects and goes back down. All the up move does is resetting and give breathing room to also go down lower. Sure, eventually such acceleration then turns into a proper uptrend, and those things happen. But just for context, it's not super oversold here, even though that for most Tesla holders, that was a very painful downturn. But if it's a fallout soon or from here anytime, then it's also not a surprise because it got reset over and over and over again just to fall back further down anyways. So yeah, well, you know, if it keeps rejecting those levels and then this downtrend and it loses this range finally, not sweeping it in one dump like psh, and shoots back up, that's not the same. Then you're most likely super easy on shorting those range lows here. And that's then where you want to look for the shorts. And if it goes a bit further and higher, then looks like that running trend could be then maintained if that's the case for the fallout. And you want to be super greedy on your entry, then it's not only your retest here losing this range, but then taking it on those break levels and trend meetup or whenever that is. You know, depends on time. Trends are a composition of time and price, so we don't know when it happens. But if it was to happen, then on any of those meetups, then you would start an engagement of short after the chart told you the story that it wants to lose the range. You don't want to think about shorting nearby range support lows. I hope that makes sense. If anything, you look for longs. Would I buy Tesla myself right now? Nope, I wouldn't, but I also did sell all stocks already over here, you know, back over 1 year ago. So there was not a lot of upside to gain anyways. And I'm actually waiting for downside and not this. What am I going to tell you? It's almost picture perfecting what Bitcoin did while everybody was yelling, oh, it's going to 150, 200, 250K. If those were out of our community, and they were thinking that. And we're like, no, it's not. The top is already here and it's happening right there. This is like the slowest ass distribution of all time, and these whales, they have patience and patience, and retail is buying, and they're reading news and buying and buying and buying. Ah, yes, more news, give me news. Give me that golden shower of news, and I buy you Tesla at $400. And the whales are laughing their ass off because they are fucking distributing into them for like, what is it, 7 months? 6 months? Sorry. Yeah, something like that. So, what am I going to tell you? Can that be a bull flag that then nukes much higher? Yes. We spoke about it in chat the last 2 months. 520 to 530 is something on the radar that you should be aware of, but betting on it is a whole completely different story. And you don't want to bet on the last few percentages of the locked-in all-time high. So, with that being said, is it a buy now? I don't think so. Is it a short now? I don't think so. You're not shorting a resistance high. You're not also not really longing at support yet. There's no trade here, and that's about it. I don't know if that answered your question, Rear Window. So the shorts were around 500, and all the other times it hit nearby before, and we talked a lot about it when they happened. It was yelling and screaming it from the skies. Get the fuck out of Tesla. Get your shorts, options, or whatever you want to do with how you trade. I just see that the tops are here, and then, yeah, well, you know, they're locked in, and barely 500 was the top. So if you missed it, you missed it. You cannot catch up to it. And if you want to short it, wait at least for something higher than nearby range support, and then think about it. Maybe set an alert, and then rethink it. Then check the chart again after you have drawn it out. And then I hope you find an answer. And if you don't find an answer, hit me up in chat or any of the guys and ask, you know. I really want to make you guys learn how to fish. So I am happily answering you the questions. Same story for NVDA. I mean, what is this? This fuck shit is distributing for even longer. It's July. July is soon in 4 months again. Then this shit is distributing for 8 months. Can this go into how is it called? Hyperbolic? Hyperbola? Yeah, it can, but I'm going to tell you. I have this on the weekly somehow. That's good. Funny. I didn't expect that I still have it. So that hyperbole already happened. Yes, people keep hitting, buying GPUs and AI and narratives and everything, but also the price didn't go anywhere. They pumped it up once. Super resistance kicks in. They distribute for 8 months. They sweep the shorts once. They probably just did it again today because they had so much time to accumulate it again for almost 3 months. Wait a second, 1, 2, yeah, 2 months. So, yeah, and we, you know, they hit all the stop losses, take their positions, and then fall back immediately. There's absolutely no strength, and the volatility in those stocks at those highs is very concerning and very alarming. There's no solid build-up of price and support. It's building. It's just volatility. Smack down, smack up, smack down, smack up. Fuck that shit. This thing is stock market is so unstable, and yeah, it is up still, but it is always up still. As much as it is this fucking dog shit and shitstorm, and down still when it's at the bottom and everybody is like, I'm not buying. I'm too scared. And now everybody is like, wow, look how the Dow is over 50,000. Look at this, you know, kind of mentality. And then when their portfolio is cut by 30, 40, 50%, then they're like, oh, what happened? Wasn't the stock market just like super great? Yeah, it's always like that before it falls out, you know. It's always calm, it's always chill. because the whales, they want to distribute on everybody and want you to read the news and be like, oh wow, look at all the GPUs selling. Wow, yeah, look at this retail. And then they nuke the price down and be like, oh no, look at all the panic, tariffs. Panic sell here. You know, I'm rambling. So not much to see here, in my opinion. Not a buy, not a short. If you swept, if you shorted the sweep high, I guess old mate likes to call it turtle soup. It's funny wording, but if you just simply shorted resistance, or what do you know? If you kept in mind that there are stop loss hunts and you had all those break levels, there's no voodoo. You just have the lines. You do your due diligence and have the lines in place. You put them there. Then you draw your chart out. And then you follow the context of the lines you have. And then you make that informed decision to trade it. You know, can the chart pump? Yes. Can it dump? Yes. Was the likelihood of rejection at resistance during 8 months of distribution? Absolutely. Did I think it will probably already fall out here initially? Absolutely. Would I have shorted here when I've drawn out all the break levels and support? No, I would have waited. It falls out. It confirms it wants to fall out and then short the fucking resistance because I know the rule books and the textbooks and also the algorithms, they are taught to do exactly that. They wait for the signal to happen, they wait for the storytelling, and then they execute it on it. They are not looking to, oops, where's this? Okay. They are not waiting for the price to come down here and then be like, okay, I missed the short. Should I pre-short because it looks like it will fall out? That's how you will start losing money. And then it's also inversely the same. Like it goes back up and you're like halfway through or 70% through, like, I missed the long. It looks like it wants to break out. Should I long now? And then, well, you know, it reverts again and fucks you over. So short resistance, long support, and then you're good. So I hope that helped Rear Window. There was a bit of rambling in between. I know, but I'm worried people lose money and I want to make sure I'm very clear about certain aspects so I can get off the rails sometimes on specifics because there are so many nuances and so many aspects to finance and trading and everything. That simple answer is then not as simple. Yeah. All right, guys, we're going for 2.5 hours. It was a great pleasure. If you have any immediate follow-up questions, shoot them right now. I'll happily answer it if I can. Otherwise, I would wrap it up for today. Rear Window, did it answer your question at least? Can you tell me that? Or was it like, I don't know. Cool. Glad to hear. All right. Then thanks for coming, everyone. I really appreciate that you stick around. You try to improve, you learn. I know it's a fucked up time for many and it's hard to stay strong, but this is the time to also prepare and to get stronger and then to get out ahead. And then what do you know? Then you have this fucking insane skill set that you build for yourself and you bring that to the next upside and the next bull run. And then you see like a crazy night and day difference between your prior performance, and then you realize that you were just gambling all day. Now that you know all those things because you executed a lot and you exercised a lot and you charted a lot, and asked questions a lot and asked for help a lot. And then you bring this new skill set to the next bull run and be like, holy shit, now I can do all of this. Because obviously there's more money to be made during really pumpy times, and we are not getting those soon. Either in the stocks, everything is just fucking around, everything is either crashed, doing dead cat bounces, or just fucking around, there's no upside, and that's rightfully so, because everything is so fucking overbought or not down enough yet if it is for crypto. So you can only like do tiny swing trading or scalping and then call it a day, and then be like, yeah, okay, that's about it. The really pumpy times and the 3-digit gains on longing without leverage, quote unquote, are not coming soon. And when they come, then you are prepared, is what I'm about to say. And I know you can do it because you're all smart fucks, and stay strong. So thanks for coming. Bye.